Bmnr today behaves like a public company mixtape of crypto speculation, creator economy stunts, and headline-driven trading. One day, it's a press release about a $200 million investment into Beast Industries, Mr. Beast. The next day, it's investor forums debating a proposed increase in authorized shares from 500 million to 50 billion. The whole time management is saying they're trying to own 5% of Ethereum. For traders, that's a feast of catalysts. For cautious UK investors, it's a Rorschach test. Is this a new kind of consumer crypto play or a high beta, narrative-only ticker? The short answer, both, and then some. Bmnr last traded near $31.16, up about 0.94% on the day, sitting in a daily range of roughly $29.78 to $31.49. Short-term range, not trend. RSI, 45, 48, neutral, no overbought or oversold signal. Different data feeds show 48 or 45, the point remains neutral. ADX, 17.6, under 25, meaning no firm directional trend. The chart is chopping. ADX below 20 often flags range market. ATR, 14, 2.65, implying materially wide daily swings versus a $31 midpoint. This is a volatile small-cap profile. MACD histogram, recently turned modestly positive, e.g., plus 0.44 on one feed. A short-term bullish flick, but not a proven trend. Bollinger Bands, mid-band, 30.76, upper, 35.85, lower, 25.68, gives a clear volatility corridor traders can use for mean reversion or breakout tests. Bottom line, indicators point to a range-bound, high-volatility equity. That's textbook for a story stock where news, deals, votes, tweets, trumps fundamentals. Fundamentals, early stage, loss-making, story, cash flow. This is crucial for any listener who confuses headlines with durable earnings. Bmnr remains loss-making, EPS is negative, e.g., -0.93 trailing, PE is non-meaningful. The company earns narrative value through its ETH holdings and strategic moves rather than consistent operating profits. It operates hosting and self-mining, plus it's pivoted aggressively to holding ETH and staking. Operational team size is small compared to the ambitions. Many functions are capital and treasury-oriented, not classic cash flow-generating businesses. Translation: the equity behaves like a high-beta crypto proxy. If Ether rallies and Bitmine's NAV grows materially, the share price follows. If ETH treads water or the firm dilutes, the equity looks like a speculative token, high risk, high headline sensitivity. Dilution, the 50 billion share ask and governance optics. This is the governance flashpoint. Management asked shareholders to increase authorized shares from 500 million to 50 billion prior to the January AGM. That's an authorization, not an issuance, but it hugely expands the board's ability to dilute in future capital raises, splits, or deals. Why investors worry? With a small float, the ability to issue tens of billions of shares is like giving the company a blank check. Even if the intent is benign, splits, flexibility, the perception is dilution risk. If Bitmine later issues more shares to buy more ETH, fund acquisitions, or fund the Beast partnership, shareholders need transparency on terms and anti-dilution protections. It's like your favorite pub asking to expand seating from 50 to 5,000. Great if crowds come, terrible for your seat reservation. By the way, if you are getting value from this video so far and want more like this, please like the video, it means much to us, and hit the subscribe button, and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Street coverage and sentiment, thin and polarized. Analyst coverage is thin. The street shows a couple of buys and limited coverage otherwise. That means when a cover note or tweet hits, price reactions can be outsized. Third-party fundamental grade. Some data providers show a D+/strong sell grade, while two covering analysts mark it by consensus 4.0 on a shortlist. Mixed signal, largely sentiment-driven. Investors should expect whipsaws until cash flows are clearer. Interpretation: when research is sparse and retail populates the tape, volatility equals standard operating procedure. The macro/regulatory overlay. Policy hearings matter. Bitmine's path is tied to the policy environment. Tokenization, DeFi, consumer fintech regulation, and staking rules. Congressional or regulatory scrutiny can swing the stock, not because Bmnr's operations change overnight, but because investor appetite for crypto treasury exposure does. Expect sharp reactions to hearings, SEC statements, or banking/regulatory moves that alter custodial or token utility rules. A favorable regulator statement is like a green light at a traffic light. A whole convoy of buyers shows up. A hawkish hearing is like a sudden snowstorm. The convoy turns around. Risk checklist, not exhaustive but pragmatic. If you're holding, watching, or shorting, here's the short list of what can go wrong. ETH price shock. Large drop compresses NAV and undermines thesis. Dilution/share issuance. Poor governance can erode per share value. Execution failure on Beast integration. The DeFi product never gains traction or regulatory issues sink the plan. Policy crackdown. New rules on tokenized consumer finance could scupper the plan. Liquidity and FX. Thin trading plus currency swings amplify losses for non-USD holders. Always run your scenario analysis. Best case, baseline, and worst case, and size for the worst case. A sample position plan, one possible approach. If you asked me how to operationally enter, define thesis, ETH will materially re-rate or Beast turns distribution into financial product revenue. If you believe neither, don't buy. Allocate small, start at 0.5% to 1% of portfolio, speculative sleeve. Add in tranches, e.g., 25% now, 25% if price dips to lower Bmnr band, 50% if a major bullish milestone is met, e.g., confirmed close plus revenue proof. Use stop size to ATR 2.65, set stops beyond normal daily noise, e.g., 1.5 times ATR, or use mental stops to avoid being whipsawed. Monitor events. If the January 19th close confirms favorable terms and the April 14th earnings show progress, treat the position as confirmed and reassess sizing. This is pragmatic, not prescriptive. Adjust to your risk tolerance. What the numbers say about market structure, short nerdy aside. Low analyst coverage plus high retail interest equals outsized reactions to sentiment changes. A single high-profile purchase or a cover note can move a large percent because the float is sticky and concentration is high. Large authorized share increase is asymmetric. The upside of flexibility is small relative to the downside of reckless issuance. That's why governance matters here. Note this as well. Daniel 7 verses 25-27 tells us, "And he shall speak great words against the Most High, and shall wear out the saints of the Most High, and think to change times and laws. And they shall be given into his hand until a time and times and the dividing of time. But the judgment shall sit, and they shall take away his dominion, to consume and to destroy it unto the end. And the kingdom and dominion, and the greatness of the kingdom under the whole heaven, shall be given to the people of the saints of the Most High, whose kingdom is an everlasting kingdom, and all dominions shall serve and obey him." Want more information about the books of prophecy? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: "I stayed until the end." Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you greatly encourage us to continue bringing to you more insightful videos. Do not miss out on our future videos. All I am asking is your subscription. Thank you for joining me today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Wish you God's love.